15% of U.S. taxpayers have unpaid taxes. Only those who have actually filed tax returns are included in this statistic. Many individuals who must file tax returns haven't. There are many reasons someone may owe the IRS back taxes. The following are the most common reasons. The IRS produced your tax return on your behalf and sent you a bill because you didn't file a tax return. When you filed your tax return, you didn't pay all of your income taxes. When you filed your return, you thought you had paid all of your taxes. Nevertheless, the IRS later sent you an automated notice of adjustment. This suggests that you may have forgotten to record a source of income. You agreed to an audit report's findings after the IRS discovered more taxes you owe following an audit. The IRS discovered that you owe additional taxes following an audit. Despite the fact that you didn't sign the audit report, you didn't submit an appeal or a petition with the tax court. The IRS discovered that you owe additional taxes following an audit. You appealed, lost, and chose not to file a petition with the tax court. The tax bill was adopted as law. You filed a petition with the tax court and came out still owing money after the IRS discovered more taxes you owe following an audit. Whatever the reason, you have an issue with the IRS. The IRS doesn't have to take you to court before confiscating your car or income. Your business, your bank accounts, and even your pension are all subject to loss. To the IRS, your tax debt has precedence over all other debts. In the event that the IRS files a notice of tax lien, your credit score might be damaged for years. Fortunately, you can avoid this. You have a fair chance of keeping your property and surviving the worst of what the IRS may throw at you if you deal with them directly and answer them intelligently. The IRS wants to get the most taxes possible from you with the least amount of work. You first receive computer-generated notices from the IRS. The IRS automated collection system then begins to work, phoning and scaring you with further notices. If the IRS still doesn't get payment, it designates a person from its collection section, a revenue officer, to speak with you face-to-face. The IRS may send your debt to a private debt collection firm for collection if everything else fails. The statute of limitations on the collection of a tax debt is a small act of mercy found in the tax code. Generally speaking, the IRS has 10 years to collect after the date of assessment, or what it refers to as the 23C date. 6502 of the Internal Revenue Code. 10 years later, the obligation is forgiven. The 10-year timeframe may be extended in a variety of ways. When you file your return and the IRS formally assesses the tax against you, the 10-year term begins to run. Nothing is achieved by not submitting a return and remaining hidden for 10 years. The IRS may sue you in federal court to extend the 10-year window. This is rarely done by the IRS. If the 10-year window is approaching and you don't owe the IRS a large sum of money, they will typically let the statute of limitations expire, freeing you from further liability. You have the power to increase the 10 years with specific activities. The 10-year window is extended until these situations are resolved. For instance, if you submit an offer in compromise, leave the country, are embroiled in legal proceedings with the IRS, file for bankruptcy, ask for a taxpayer assistance order, sign a waiver form agreeing to an extension, or ask for a hearing under the collection due process. These several rules are extremely intricate. If you'd like further details, or to see a seasoned tax expert, contact us. There are 6 ways you can take care of a tax obligation that you are sure you owe. 1. Full payment. 2. Mutually agreed upon monthly installment payments. 3. File for bankruptcy to pay off the debt or reduce it. 4. Through an IRS offer in compromise, reduce the debt and make a payment. 5. Request that the IRS decide to halt collection efforts because you are momentarily unable to pay. 6. Watch for the statute of limitations for filing a claim to run out. The most appealing options, reducing your debt through an offer in compromise, declaring bankruptcy, or having the IRS find you temporarily unable to pay, are also the most challenging to obtain. For the majority of working people with homes and sizable assets, paying in full is the best option. However, for many taxpayers, paying in installments is the only option available to them. More than 2.6 million taxpayers used installment plans recently, paying more than $4.5 billion in total. Don't assume that paying your IRS debt over time or not at all is the wisest course of action. Before deciding how to handle the tax collector, watch the complete video collection. Do you truly owe everything the IRS claims you owe? Verify the bill is accurate before agreeing to pay the IRS. You have the right to a thorough justification for any IRS bill you owe. Here are some recommendations for ensuring that your bill is accurate or even lowering it. To check if you might have overlooked any deductions, losses, carryovers, or similar issues, go over your tax returns or have a tax expert do it. You can alter your tax return and lower your charge if you identify any. Check the statement to ensure that all payments, including any wage or bank levies and any refunds received, have been credited to your account. The IRS frequently forgets or applies payments and credits to your account improperly. Request a transcript of your account to learn how the IRS determined your tax liability and credited your payments. You can get a copy of your transcript by going online to irs.gov. Expect the transcript to take weeks to be delivered. Once you get the transcript, compare it with your canceled checks, old tax notices, tax refunds withheld, and bank and wage levies. If there is a discrepancy in the records, inform the IRS right away. Make sure you are getting full credit for all of the payments and credits to your account. You should be prepared to send copies of your payment receipts or other relevant paperwork. Penalties and interest are generally included in all old tax bills. Some or all these penalties may be able to be removed. For information on whether you qualify and how to approach the IRS for an abatement, watch the whole video collection.